What's up, everybody, and welcome back to another episode. My name is Rolando, and on this channel we talk about all things personal finance, how to manage and stay out of debt, and how to invest. So in today's episode, I'm going to share with you guys the one stock in my portfolio that has returned over 400% since I bought it a month ago. Yes, this stock is heating up and it's even more popular than Tesla. Be sure to stay tuned to the end of the video to find out which stock I'm talking about. So guys, it's been a while since I made a video, but I wanted to give you an update first on what I've been doing in terms of investing. So as you guys know, I choose to use M1 Finance as my investing platform of choice. Some of you guys may use other platforms such as Robinhood, Acorns. It doesn't matter. Whatever you're using to invest, that is great. But I wanted to go over some of the stocks that I have. And I know at the last time we talked, I had put in $1,000 into the portfolio, but so far I've invested a lot more. That's update number one. Update number two is I wanted to let you guys know that I also created another more risky platform also inside of M1. So let's just pull up M1 Finance now. So as you guys can see on my passive income portfolio, this is more of my, I guess you could say, less risky stocks. It's more of those established stocks. This is pretty much the same as buying and investing in an index fund, but in this particular portfolio, I cut out a lot of the fluff. A lot of what's made up, especially in the S&P 500, I have here. So you can see Amazon, Microsoft, Apple, Facebook, Alphabet, a lot of those. And also in the streaming subpie, I also have Netflix, but I also included Roku, which I believe is doing pretty good as well. So as you can see, if you scroll up to the very, very top, I have a 27.97% return overall. Now this might change up and down because the market is definitely active right now. But I definitely want to give you guys an update. So right now, currently I have $1,819 in this portfolio, and it's been doing pretty well for me. Also, if you go into payments, I don't remember if I showed you guys last time, but I added Shopify. Shopify has done really well for me. It's up 100%. 108% to be exact. Square is up for me, 115%. PayPal is up. Visa is up, MasterCard up. So the payment subpie has done particularly well for me. Now, if I change the sort over here to the left from value high to low, and I just go ahead and go to return, this will sort my portfolio based on the greatest return, not the greatest dollar amount. So I can go in and make adjustments accordingly. The communication subpie, which is made up American Tower, T-Mobile, and Verizon. I ended up adding T-Mobile since the last time we chatted. American Tower and T-Mobile is definitely carrying this part of the portfolio. And American Tower is up 11%. And T-Mobile's up 6%, but Verizon is down. But overall, the portfolio is up. Payments we just talked about. Then Amazon has returned 50%, Apple almost 50%. Facebook was on a really good roll for a while there. But Mark Zuckerberg came out and made some questionable comments. I don't want to get too political, but he made some questionable comments, and the advertisers are on boycott right now for Facebook, and they have lost a little bit of the gain that they had. They also announced that they were going to compete with the likes of Square and with Shopify, all those other places that have online marketplaces and stuff like that where customers can shop and make payments. Facebook came out and said they're going to have something similar to that as well, and the market liked that. But the market doesn't like when Facebook is not making ad revenue, since a lot of Facebook's money is made up of ad revenue. So that's why it kind of took a dip here recently, but it's still up pretty good. Microsoft is up as well. The Home Depot, I'm actually shocked because when the economy dipped due to the beer virus, I expected home builder stocks to take a dip, but the Home Depot is doing pretty well. It actually recovered pretty good. I actually took it down to about 2% of my portfolio, where previously I had 3%. But, I might end up in it again, especially since I'm looking at buying a house myself. One thing I will say about investing is invest in companies that you believe in, invest in companies that you use. For whatever reason, this isn't some strategy you'll find in the textbooks, but what I have found out is something about a company, you will research more about that company. It's one of those hidden psyches, right? It's one of these things that is deep within us that makes us drawn to that company, and you're drawn to that company for a reason. Now, don't get me wrong, you could use other, more scientific research. You could go to Yahoo Finance, you could go to the Motley Fool, you can go to Zacks or other stuff like that. Definitely take a look at that and use that. But at the same time, you know, a lot of these stocks I've done a lot of research on, but a lot of these stocks I know and I believe in. Also, moving on to Apple and Google, I use an Android device. Also, I like Chrome. There's a lot of Google devices and software that I use, and I believe in this company, and I believe that it will continue to grow. Actually, I'm posting this on a Google website, so this will be brought to you guys by YouTube, which Google owns. So Google, I think, has a lot more growth into it. So inside of software, I only have Adobe right now. Obviously, I use Adobe Premiere. I use Photoshop, a Lightroom, a lot of different things. And I believe in this company. I believe that it can grow. So I ended up adding it later, and I added it to the SubPie. Go a little bit faster. Semiconductors have done pretty good. I expected to do a little bit better. One of the ones that's really shocking me is AMD. It's the only one that's down for me right now. AMD is down 5% since I bought it. I guess I missed the train on that a little bit, but that's all right, guys. That's why you spread your money over multiple stocks to soften the blow. Now, granted, had I known, I would have put hindsight is 2020. I would have put all my money in Nvidia because it's up 55%. But you never know which stocks are gonna do well. You never know when a CEO is going to say something crazy, Mark Zuckerberg, and that could hurt the stock. So it's good to spread your wealth out. Disney is actually still up for me. I bought it at a low, at the virus low, and the parks are starting to open up. When those parks start to open up, it'll be really good. Also, in terms of streaming, which is below Disney, Disney Plus also has a streaming platform, so I can see there can be a lot of growth going on. I only see Disney increasing from here. And streaming, you guys, I believe I showed this to you earlier, but if I didn't, there's Netflix and Roku. Both of those guys are up. I believe Roku has a better growth story at this point. I believe Netflix has grown pretty fast, pretty rapidly. I think I kind of missed that one, but I didn't know about investing. You guys are already doing a better job right now of investing in yourself and learning more about investing by watching videos like this. Maybe not just my videos, but other people's videos on YouTube, because at the end of the day, even if you invest your money into something, you have a better chance of getting a return than just to go and spending it, I don't know, at the local bar. Well, if you guys could go to bars right now, because a lot of things are closed. So maybe that's not a good example. But the point is, if you invest, as Warren Buffett says, low cost index fund, an S&P 500 fund, and just set it, forget it, don't pay attention to any of the headlines, your money will continue to grow forever. Well, as long as, the world is still intact. But that's, I digress. Anyway, healthcare, I don't know. Actually, I'm skipping one. Let's go back to energy. Energy has been okay. Chevron and ExxonMobil, right now, oil prices is pretty low. We are experiencing another barrel surplus, so I expect energy to take a hit right there. Healthcare, I have AbbVie, Teladoc. I like Teladoc. As you can see, I added 22% of Teladoc, so it's basically a Teladoc, telephone, telesales, telehealth. It's one of those types of companies where you can speak to doctors and get, medical advice over the phone or, through the web, which I think in this particular day and age will be great. And I think this will be around to stay for a long time. United Health I have. Is there any negative? The only one I have negative is Walgreens, which is strange. That's the only one that I have negative. I'm not sure why that is. Walmart is doing pretty good. Walmart just actually came out and said that they going to start their own subscription service to compete against Amazon. And guess what? It's only going to cost $99 a month. So it's going to be less expensive than Amazon Prime, which is $120 a month right now. I think that'll be pretty good. The market liked that, and it responded by giving Walmart a pretty good uptick. So Walmart should be one to stand out for a while. Financials are a little bit low in terms of overall, in terms of this sub pie in my overall portfolio, and that's because a lot of people think the stock market is an indicator of the economy. It's not. It's either a leading or lagging indicator, but financials are pretty much tied to the economy. Even though stocks are up, the economy overall, if you take a look at it, a lot of people are still unemployed, and so banks and financials are taking a little bit of a hit, so their growth story here is not as good as you can see my other portfolio. So pretty much when the banks start to take off, that's when you know the economy is definitely recovering. But that doesn't mean you can't make money. You can always make money by finding and investing in good companies. Or if you don't feel comfortable investing in good company, do what I I recommend on this channel, which is just basically invest in index funds. You can never go wrong with an index fund. You're going to be subject to the market. When the market goes up, you're going to make money. When the market goes down, you're going to lose money. But overall, if you keep that money invested in an index fund, over time it will always go up. And then lastly, beverage is my least performing. That is Pepsi and Coca-Cola. But anyway, guys, that is the update number 1 of my portfolio. So next, I want to move on over to my high growth portfolio, which I was telling you guys about as a new one I created. And this is my more risky portfolio. So I wanted to separate the 2 portfolios. I eventually want to get the high growth portfolio to about $10,000 and then stop, and then move all my money back to the passive. The passive is the safe one, which I want to put most of my money into. But right now, it's really a stock pickers market. I don't recommend that, especially on this channel. But if you do, this is what you guys came for. This is probably why you clicked on this video. So let's take a look. Wow. Right off the bat, when you sort return to high, you guys can see NIO is a EV, electric vehicle manufacturer similar to Tesla. So this Tesla, I guess, killing stock, but it's not really well, I guess in China it could be a Tesla killing stock, has returned to me $1,603 on a $1,000 investment. So it has returned so much, and I've only had it a month. It is absolutely insane. The market is still open, so right now it is up, what, another 10% today. So in this stock alone today, I've made, so in this stock alone today, I've made $223. Yesterday I made $300. It has been going about $250 to $300 every day this week, so the last 3 days or so, and this stock has been absolutely insane. I cannot tell you guys. One of the things is battery prices are starting to come down. NIO actually announced that the shipments that it made in Q2 or Q3 had actually exceeded their estimates, and analysts actually upgraded the stock to a $10 buy price. But right now, the buy price on this is about $14.43, but I bought most of my shares at $5 because I believed in the stock, and that's why I have got tremendous growth. I mean, you guys can take a look at the rest of the portfolio. I have the Trade Desk, Twilio, Plug, Fastly, Okta, Chegg, Cardalytics, Datadog, Insego, Cloudflare, and DraftKings. Of this portfolio, which is risky, I only just recently added Cloudflare 2 days ago. The only one that is down is DraftKings, but overall, the portfolio, which is being held up by NIO, is up 156%, and I've made almost $2,000 in terms of the money invested in this particular portfolio. Now, I'm not telling you to go out and grab NIO right now, but I do believe, as we've seen in America, that if there is a big electronic vehicle company, not only if it has good production, momentum will carry this as it's done with other stocks. As you guys can see, another one would be Nikola, that is competing against Tesla in the United States. But this is a Chinese stock, and I believe that this will continue to grow. Tesla is almost over $1,400 right now, and this stock is only $15. So there's a ton of room to grow in this particular stock if you plan on buying it and hold it for a long run. Anyway, guys, I hope that you have enjoyed this video. I hope you've gained some insights. I hope you can understand why I would choose to invest in some of these companies. But if you have any questions, please leave them down below. If you like this kind of content, I know traditionally I like to stick with the index funds, but every once in a while I don't want to be, I guess, stuck inside one little box. If I see a stock that I think is doing pretty good or has done pretty good in my portfolio, I want to share that with you guys as well. But anyway, some other things that might come up later. I want to talk about 401k, talk about the different vehicles that you can use to shelter your money from taxes. If this is stuff that you want to hear about, leave a like on this video. Don't forget to subscribe, comment down below, and I will catch you guys in the next episode. Peace.